All right, so today we're going to talk about a company you've probably never heard of, but that is absolutely essential to an industry you definitely know, insurance. We're diving into Guidewire Software, and we're going to see why it's basically the digital backbone for some of the biggest insurance companies on the planet. So I want you to picture a massive insurance company, right? Think of a giant like Liberty Mutual. They've got millions and millions of customers, an insane number of policies, and a never-ending stream of claims coming in. How in the world do they keep all of that straight? What's the central brain that makes it all work? Well, that's exactly where Guidewire comes in. And honestly, the best way to think about them is as the operating system for an insurance company. You know how your laptop runs on Windows or Mac OS? Well, a big property and casualty insurer runs on Guidewire to do all its most critical stuff.
So what does this operating system actually do? Let's peel back the layers here. This isn't just one piece of software. It's the whole shebang, a full suite of tools built to manage every single part of the insurance journey.
It really comes down to three huge jobs. First up, you've got PolicyCenter. That's where all the policies get created, priced, and managed. Then there's BillingCenter, which, you guessed it, handles all the money. It collects your premium and pays out commissions. And finally, and this is a big one, ClaimCenter. It manages the entire claims process from that very first phone call to the final check being sent. It's truly the engine room of the whole operation.
Okay, so that's what it does. But how does this turn into a killer business model? Well, the key here is Guidewire's massive shift to the cloud. They've moved away from selling software licenses one time to a subscription model. And this is a huge deal because it completely flips their financial story on its head, creating this beautiful, predictable, recurring revenue stream.
Let me give you a quick example. Let's imagine a startup called College Guard that wants to insure laptops for students. Now, instead of burning millions trying to build their own complicated software from scratch, they just subscribe to Guidewire's cloud platform. Bam! Instantly, they have a world-class system with fancy AI that can spot fraud. And what does Guidewire get? A nice, predictable fee year after year. And this is where the stickiness comes in. Once College Guard is running on Guidewire, trying to switch to a competitor is like performing a heart transplant on the business. It is incredibly difficult, risky, and expensive. You just don't do it. And you can see this big shift happening right here in their revenue streams. Subscription and support, that's the big kahuna now, their most important piece of the pie. Services, helping clients get set up, is still a solid chunk. But that old school license revenue, that's the legacy business they are leaving in the dust. And this is the number that really tells the story. Annual recurring revenue, or ARR. Guidewire has blown past the $1 billion mark in predictable, subscription-based revenue, and it's still growing at a super healthy clip, around 20% every year. For a software company today, that ARR is everything. It's the lifeblood. Okay, $1 billion in recurring revenue is awesome, no doubt. But is the company actually financially stable? Let's pop the hood and do a quick health check. So, at the highest level, the picture looks really solid. The company's total assets are sitting at $2.6 billion. That's more than double its total liabilities of $1.1 billion. That gives them a really nice cushion and a very healthy balance sheet. And this quote right here just nails it. Having more cash on hand than your entire debt load, that is a fantastic position to be in. It just screams financial stability. And if we put some hard numbers on that, Guidewire has about $1 billion in cash and investments. Compare that to its total debt of around $675 million. Plus, the money it generates from its operations easily covers that debt. So they are not sweating their bills, not at all. So we've got a great business model and rock-solid financials. But what about performance? How have they actually done, and what's the forecast looking like? Well, historically, Guidewire has been an absolute growth machine. Its earnings have grown, on average, over 35% a year. That's way ahead of the broader software industry, which is already a high-growth space. And what's wild is that recently that growth has actually been getting even faster. So the big question is, can they keep it up? Well, analysts seem to think so. They're forecasting Guidewire's earnings to keep growing at over 24% a year. That's still well ahead of what's expected for the broader U.S. market. So yeah, the growth story seems to have plenty of gas left in the tank. Okay, so everything sounds pretty amazing so far, right? But here's where it gets tricky. This brings us to the classic investor's dilemma. We need to weigh the bull case, all the good stuff, against the bear case, which is all about the risks. And this really frames the debate perfectly. On the one hand, the bull case is all about that incredible moat. A 95% plus retention rate is just insane. Customers do not leave. They're the gold standard in the industry, and they're weaving AI into everything they do. But on the other side of the coin, the risks are very real. These cloud migrations are super complex. The stock is, well, it's expensive. And if the economy takes a nosedive, insurers might tighten their belts on big tech projects.
And to really hammer home that valuation risk, just look at this. Guidewire's price-to-earnings ratio, which is basically what investors are willing to pay for its profits, is nearly 148. That is way, way higher than the software industry average of about 31. So you're paying a massive premium for Guidewire's quality and its growth prospects.
So that leaves us with the million-dollar question, doesn't it? We have a dominant company, a fantastic operating system-like business model, but it comes with a seriously premium price tag. Is all of that amazing future growth already baked into the stock price today? That's the puzzle every investor has to solve.
And as always, just a quick reminder, everything we've talked about here is purely for informational purposes. It is not financial advice in any way, shape, or form. So please make sure you do your own homework before making any investment decisions.